What's up, Banter fam? Welcome back to the show. It's been a crazy night in crypto. We had the FOMC, then we've had rumors of more banks in the US collapsing. We've also had the SUI launch, which revealed some really interesting things about their tokenomics, not in a good way, but it has entered the top 10 in terms of FDV. We've also had a lot of news on the Ordinals front, a lot of news on the Ethereum meme coin front, and then I've also got some other altcoin alpha to share with you today. So actually a lot has happened. So smash the like button if you're excited. Bitcoin has had a nice bounce here, largely being driven though, not by FOMC, but by banking concerns, which continue to shock the US economy and investors. And although the SPY, so the stock market index, is actually down slightly today, we have Bitcoin pumping in the face of adversity, following the same narrative that it's been following ever since it really started running, from 20K all the way up to 31, which is banking concerns and Bitcoin being that flight to safety. So it's good to see that narrative's back. Will it give Bitcoin the steam to push up to the 32K region? Well, let's see. Let's discuss that in today's video, and also let's discuss how alts might respond. Someone said, are we going back to 26K? Well, we'll get into that in today's video, but first we need to do a little bit of context. Gold is also up. Yeah, gold and Bitcoin actually running on the whole flight to safety narrative. But if you actually look at the stock market right now, we've actually had a pullback. So decorrelation for Bitcoin, not something dissimilar from what we've seen over the last few months. Of course, gold as well, following that same trajectory, being your flight to safety asset, Bitcoin being your digital gold type asset, or at least that's kind of what narrative is starting to develop. I think the Fed raising interest rates to 5%. We knew it was going to break something, and things are now not just starting but continuing to break and getting worse and worse from a banking sector perspective. Obviously, a high interest rate environment makes it difficult, and there also is likely a hidden agenda behind the real reason for the banking collapse, which we're also going to discuss today, which could be potentially facilitating a quicker pace of banking contagion. All right, so let's get straight into the big news, which was obviously the FOMC. I say it's big news, but in reality, it was a bit of a nothing burger. But I think it was just that psychological event that you have, marked out as May 3rd, and until you pass that event, then Bitcoin was quite hesitant to make any sort of definitive trend in the upwards or the downwards direction. So now that it's behind us, we can look back at FOMC and observe, okay, what actually did they say, and what actually does this mean? And then we can make a plan in terms of where we think the market's going to go from here. So they raised interest rates by 25 basis points. You guys know that was expected, and that's exactly what they ended up doing. They omitted prior language signaling more hikes ahead. It's interesting because Powell was kind of really trying to toe the line in this press conference. I was asleep, but when I woke up, I listened to the press conference again, and it was really weird because he was like trying to be hawkish. So the language he was using was like trying to be hawkish, and like calm the markets down from getting too excited. But what he was actually saying, if you kind of got rid of all the fluff, was actually kind of dovish. So it was a weird, it was a weird situation where some of the language that they'd used earlier in the year to really try and cool off the markets, get inflation down, it was now suddenly removed, and we can see this via the comparison from the March to the May FOMC statement here, the Fed release statement. So a lot of that language was removed, but it was said in the same hawkish tone that he's maintained for the last few FOMC meetings. So the actual net outcome of the FOMC, I guess you could say, was a slight positive. But the, I guess, real shocking thing from my perspective, and I know others share this view as well, is the kind of complete denial of the banking collapse. Powell basically refused to acknowledge that the banking collapse, it was even happening, seemed very nonchalant about the whole situation. He said the banking system is sound and resilient, yet at the exact same time, you have one of the largest California banks like teetering on the edge and dropping, and many other bank stocks starting to have huge drawdowns, 40-50% drawdowns. Meanwhile, he's saying the banking system is sound and resilient. So it just shows that his real mandate is just to focus purely on inflation. It's to focus on getting inflation down and maintaining a strong labor market. and he doesn't really seem to care about anything else right now. Even if that means causing a major bank collapse. Well, the next question is, well, if things keep getting worse from a banking perspective, will the Fed have to step in and print more money? And I think the answer is probably yes. But how long they wait to do that, how deep they let a recession go before they do that is the real question, and that's likely going to dictate how markets react over the next few months. I explained my thesis yesterday more in depth on that if you want to go and watch yesterday's video. So Macro Alf said, to summarize the FOMC meeting today or yesterday, depending on what country you're in, he said most likely the last hike in the cycle. That's kind of what we expected. One last hike, 25 bips, couple pauses, and then a couple rate cuts later in the year. Unanimous vote on 25 basis points, and some additional policy firming may be warranted. Wording has disappeared. So yep, we saw a lot of the wording that was used in March now not being used. So, slightly more dovish if we actually look at it from a language perspective. Macro says from here, the hurdle to cut and raise rates is high. Base cases, we are stuck at 5% until something breaks for good. So definitely we are going to get rate cuts. But rate cuts aren't, explicitly in and of themselves bullish. I think this is a bit of a misconception that you see online, that rate cuts is like an instant bullish factor for markets to go up. It doesn't work that way because markets are forward looking. So they know that there's rate cuts coming, and they'll price in the likelihood of rate cuts coming, and anything less than 2 rate cuts will shock markets in a negative way. So the market is forward looking. So rate cuts aren't in and of themselves a bullish thing, at least until we know the exact effect of this 5% interest rate on the banking system and also on the rest of the economy. Because if the economy goes into like a deep recession, then, well, it doesn't matter if you start cutting, you're kind of just treading water. And because that's going to take a year, 2 years to play out, right? But they may be the markets may front run like a cut and we get a huge pump, but that's complete speculation. The reality is we just don't know how bad economic data will get, and the only way we're going to know is just to sit tight and hold on. It's the only real thing we can do. I'm sorry I can't predict the next 3 GDPs for you, but I kind of give you my sentiment. I think it's going to be a lot worse. The Fed's response will be the kicker, and that's going to rely on whether inflation is continuing to come down or not, which it has been. But what we typically see with inflation reduction cycles or disinflationary environments is inflation's initial drop off. The top of the curve is quite steep, and then as you get towards the end of the curve, the amount of rate hiking and the amount of policy change that you need to affect interest rates to go from 3 to 2 is a lot more severe than going from 10 to 6, because the first bit's the easiest, but when you really try and get down to the brass tacks of where the core inflation is coming from, that's the difficult bit to get down. So maybe America just needs to accept a new baseline standard of a 3% target rate instead of a 2% target rate. Jerome was actually asked that in the press conference, by the way, and he denied that. He said they wouldn't be happy with the 3% rate, but he did have a weird pause and took a while to answer that question. So maybe that's, I don't know, maybe they start priming the markets for the eventuality of a 3%. Someone said all these meme coins trying to pump. Yeah, we're going to talk about meme coins. 𝗵𝗵𝗃 actually broke out of the wedge that I shared on the show yesterday. It looks like nothing, but if you actually draw the breakout on the retest, if you got an entry, you would have made 26%. Not that you necessarily would have taken too much profits, but the thing is, we were heading into resistance. You guys know how breakout of flags work. When you typically get a breakout of a bull flag, your principal target becomes the top of the flag, especially if you get a break towards the end of a flag. Sometimes it's a good TP zone at the top. Didn't quite get there, came back down, and now had a retest of this horizontal area and is now bouncing. But I guess the negative thing for 𝗵𝗃 is you are making lower highs. So if we draw it in, really super rough like that, you can see that, we have made 3 lower highs now. So starting to lose steam, but some of the rest of the meme coin market is still performing super well. I'm going to get into that later. I want to just finish on the macro discussion, and then, we can get into meme coins and stuff, because honestly, it has been, quite a lot of fun trading meme coins. So looking to the next FOMC, because it's always the next thing in crypto and in markets. The market loves looking at what's next, and I mean, for good reason. We see that there's actually a 13% of a rate cut. Now, the reason I think there's a 13% chance of a rate cut is due to this banking collapse. So that's like a small 10 to 13% chance the banks keep collapsing and the Fed is forced to make a move sooner rather than later. 86% though, the overwhelming majority of the probability is skewed towards no move at all, just a pause, which is basically what we expect if we look at the dot plot. We're in line with, back in March, what most of the Fed speakers had voted on, and that is a 525 bips cash rate. So we're basically in line with peak rates now. And that was the target back earlier in the year for the end or the peak of the tightening cycle. And from here, as you can see, it's basically all all the moves will either be a pause or down. We're not getting more rate hikes. It'll be pauses and cuts. The question then becomes, how many cuts? How many pauses? Do we get a cut next month? Probably not. The probability is that for the next 2 months we don't get a cut, or we get a pause and then a cut. But I mean, there is there's like still a small shining chance that you get a continued banking collapse and then like they're forced to cut. And if we look at the meeting probabilities, you can also see the percentage likelihood of the various cash rates starting to kick in. There's a 30% likelihood that we're at a 275 bips rate by the end of September in 2024. So you can see here, this is where we currently sit. So 500, and then going down and down and down along the curve, you can see the probabilities on this graph of the Fed pivot. If you guys want to have a look at that and see how things currently stand, and then we can go compare that next month to the last month and see what the major changes were. So the Fed funds rate overall is now actually at the same level that it was pre-GFC. So when they had to start cutting rates during the financial crisis, it's funny that raising rates led to the financial crisis, by the way. But hopefully that doesn't happen again. No one wants a financial crisis. But when you do raise rates this significantly, things do break. Things do break. We're going to get into the banks in a second. But the Fed funds rate is actually at the same level here, and that it will likely play out similarly in terms of their reaction, which is back down, cutting all the way back down to like a 1 to 2%. I think if we look at the meeting probabilities, we can see 2024 November, we're looking at 275 to 3, so 2.75% to 3%. So not as low as the 0% rate, but that is notwithstanding, not including the likelihood of a more severe recession. Obviously in 2008 that was like a super turbulent time for economies. 2007, you had that real estate collapse, and during that period, like they needed to go to essentially a 0% cash rate in order to stimulate the economy to get out of that hole, and they did, because ever since 2008, we've had basically over a decade, almost a decade and a half of QE and a pretty lax monetary environment, which has been great for things like risk assets, great for tech stocks, great for crypto. We've had 3 cycles in the meantime. But what I fear is like we're coming to the end of that, and we are in a QT cycle. And yeah, the Fed hasn't really shown their a propensity to allow any sort of macroeconomic downturn. It's a point that Harry Dent made on the last banter on Friday, that the Fed is not allowing normal market behavior, which is essentially, stepping in every time things look bad, instead of letting natural economic cycles play their course, which is you have periods of expansion and then periods of contraction. And it seems like the Fed has a propensity to only allow periods of expansion and does not like to see periods of contraction. And I think that's because it's largely a political game. I think that's a flaw of the system. And I don't know if there's a better system than democracy, but one of the flaws is that we're kind of on these 4-year cycles, right? Because no politician wants to see the economy collapse whilst they're in power. That's bad. They'll lose power because people lose jobs and start complaining. But the more you kick the can down the road and the more you delay the inevitable, the worse the problem gets when they eventually let things break. The question is, will they let things break this time? Because they probably need to break to reset. And I don't think they've shown any indication towards wanting to let that happen yet. I mean, just look at the last 3 weeks as an example. If you actually go into the Fed's balance sheet, we had the issue with Silvergate and Silicon Valley Bank, and then Credit Suisse. During that period, they essentially paused their QT to inject $2 trillion in a bank term funding program into the economy. Now, not all $2 trillion was injected. I think it was 300 bill that was injected, 2 trill over 2 years. And we see that they were conducting, what's been quite a steady QT cycle after almost doubling the money supply in 2021. And then we had, in the space of 2 days, basically, a huge injection of actually $400 billion. And then now we're seeing tightening starting to kick back in again. So if you need recent evidence of the Fed not wanting to allow normal market cycles or normal market failures, or just market failures in general, you could see it here with this huge injection of liquidity when Silicon Valley Bank was collapsing to backstop the banks. And then the other question becomes, do they keep doing that every time there's a banking collapse? And the answer is right now, yes. And if the answer is yes, then is that good for Bitcoin and gold, especially if Bitcoin has this flight to safety narrative? Then probably yes, because Bitcoin and liquidity are basically one-to-one correlated. The problem is we are in a QT cycle, so you can't really rely on these short-term liquidity injections because we are in a general tightening environment. And when you're in a general tightening environment, it becomes very difficult for risk assets to thrive. And I'm not like super bullish on stocks right now. If you guys don't know my investment, how my investment portfolio is structured, I'm actually more heavily weighted stocks than crypto. Some people don't know that, but that's because, when I first started trading stocks and investing in stocks, they outperformed percentage wise, and I had some good trades on Apple, etc. My stock weightings are quite heavy, but recently I've been allocating more fresh income towards crypto and so mainly Bitcoin and ETH, but mainly Bitcoin and cash, because I am trying to protect my stock position, hedge against it without having to sell and obviously pay tax when I sell, capital gains tax. So that's because generally I'm not too bullish on the next few months, at least in the stock market, because here's the thing, right? Let's say banks do collapse and we do get a massive banking collapse and Bitcoin runs in the face of that because it's digital gold and it's, a flight to safety. Now it may not, but do you think the NASDAQ follows that same trajectory? Do you think the S&P follows that same trajectory? I mean, maybe if the Fed really comes in and does something drastic, like cutting rates or doing a huge liquidity injection, but I don't think so. I think it's more of an isolated Bitcoin catalyst and a bearish stock market catalyst. And for that reason, you'd want to be heavier in BTC than stocks if that was your outlook. So yeah, that's kind of my thoughts there quickly. So what actually is happening with the banks? That's obviously an important thing that I haven't even touched on. Well, clearly we've seen the biggest banking collapses in history take place over the last few months. So actually since March, we've had 3 of the 4 biggest banking collapses in history. You've had Credit Suisse, Silicon Valley Bank, actually First Republic as well, and then you also had Signature. Those banks rank in the top 5 for the biggest banking collapses in history. So that's only not beating the 2008 collapse. I think it was Washington Mutual which collapsed, and you also had Lehman Brothers. So it's been the biggest banking collapse since 2008. So this is big. This is huge. Actually, it's the biggest in history in terms of dollar value if you aggregate the dollar value. So you've seen 4 or 5 go down already, but now you're seeing over these last 12 hours rumors of other banks starting to experience issues. So you have PACW decreasing by 44% after hours, after there's been rumors that they are experiencing concerns and they're also exploring a potential sale. So will JP Morgan just gobble them up again? Well, probably. Either them or Bank of America or Wells Fargo or one of these top 3 US banks are basically accumulating the entire banking industry. It's almost like the entire banking industry is on sale, and these big guys are just going, okay, FDIC, taxpayers, you help us to just accumulate more and more banks, and let's just build up a portfolio of 50, 60, 70 small regional US banks, and let's just concentrate the banking sector into 3 or 4 big banks. That's basically what's happening, and it's kind of scary. It's actually very scary. We saw MCB, WAL, all of these banks now experiencing issues. The big ones don't get hit because the big ones have the firepower and the backing and I guess more trust than a regional bank. Consumers it's kind of this self-fulfilling prophecy, right? If you're a consumer and you have money in a small bank, or you're a business and you have money in a small bank, and you see other small banks collapsing, and you see other big banks buying those small banks, you're kind of going to start panicking. You're probably not going to want to do business with that small bank because you become worried about their future, and you're probably feeling a lot safer doing business with a big bank at the moment. And that's a problem because it's just speeding up the self-fulfilling prophecy, which is the condensing of the banking sector into a few major parties. Now, yeah, 2023 is actually bigger than 2008 now, so we can see the collapses of the recent banks, some of the biggest collapses in history. Washington Mutual was the biggest. I don't know if you can see this chart very well, but that big bubble is Washington Mutual. Then you have First Republic, Signature, and Silicon Valley Bank. This is the size of the collapse in dollar value. So you can see here that these three are actually three of the four biggest of all time. All of these 2008 ones were like little banks that collapsed. We've just had big fish go down. The government won't let the big ones go under. Absolutely not. Absolutely not. Even if they should, they won't, which is, and I'm not saying they should, I'm saying from a, free market perspective, you could argue that they should just let the market do its thing and sort itself out. That is what, capitalist society should do, but they like to intervene. That's the beauty of going off the gold standard in 1971, that you set a precedent to be able to have complete flexibility over your own currency, how much you issue, when you issue it, where you issue it. It's a problem. And that is, at the end of the day, the thesis behind why I stack Bitcoin basically every month, more aggressively, obviously, when it's lower than when it's higher. But that's the thesis behind why a large percentage of my net worth is in Bitcoin, and to a smaller extent Ethereum. Ethereum is more of a bet on technology for me than ultrasound money. I think that's a bit of a meme, but that's why I bet on Bitcoin. Now, look, you guys, it depends what situation you're in, because I am at the stage of my life where, look, I'm young, but I've made enough money to be able to, or have to start thinking about protecting it. So if I want to protect capital and make money, I view Bitcoin as a good bet. If you're in a position where your sole goal is to make money, then, maybe Bitcoin doesn't give you those crazy returns that you're after, and then you have to adjust risk accordingly. But when you are betting riskier, you have to also be a lot smarter and try and not lose money. I think that advice is really good, actually. The advice, I've forgotten who said it, but basically it's along the lines of, like, just don't lose money. And I know that it's like sounds super basic, but when you think about it, the mistake most investors make, it's not taking profits too early, it's not missing an opportunity, it's actually just losing money. So if you can limit the amount of bad bets you make and be more selective with the bets you do make, that's actually oftentimes the best outcome long term. Just trying to limit mistakes. Just focus on limiting mistakes. Focus on protecting capital. Because your US dollars, sure, they're going to go down 3% a year. Maybe now they're going down 5-6% a year. So you don't want to stack US dollars, but that's a minimal impact compared to if you made a horrible investment that goes down 50%, then suddenly you need to make 100% to make up that 50% that you lost. So it's much easier just to not lose money than it is to make money. Now, if you lose half your money, you lose 50%. If you have to make that money back, you need to make 100% with the remaining 50% to break even. It's harder. So it's just easier not to lose money. So it depends where you are in your investing journey. But, for me, I've made decisions about some of my allocations that, are basically geared towards just not losing money. So that's why, I have a lot of cash right now. I'm pretty cash weighted. Why? Because if things do hit a breaking point in Q3, I want some protection. Gold's good protection. I own some gold, but I think cash is the best protection because it's liquid. There's no market risk, and there is inflation risk, but that's more of a long-term risk. If you have T-bills as well, you'll cancel it out. But even if you just own dollars, you're risking it. Yeah, sure, you might spend a few percent in interest, but that's kind of the cost of saving. So yeah, that's just some quick thoughts on managing risk. But yeah, I am still fairly heavy cash. But if the market does pump, it's fine because I have enough Bitcoin. I've stacked enough Bitcoin since late 2018, 2019 more heavily, to be able to happily have that position and ride it all the way up to 100K. And I'm not going to FOMO because I have enough. You kind of have to be happy with, your exposure sometimes and just accept when you have enough. Now, I'm always looking to stack more Bitcoin, but there's like a limit, right? There's a limit when you have too much and you're exposing yourself if the market drops, or not having enough and not maximizing when the market goes up. I feel like I'm personally getting to a place where I've got enough either way, so I'm happy either way. But of course, my bias is well, I would much rather see the market pump. I would much rather see $1 million Bitcoin than a 5K Bitcoin, with the exception of my ability to accumulate more. I would love to accumulate more Bitcoin at 10K, but at the same time, I fear the damage it does to the industry will be so great that it makes that next recovery a lot harder. So that's my argument against a 5 to 10K Bitcoin. That it'll really test the market, and it might not recover if it went that low, just because of that, because of the sentiment hit, because of the losses, because of the regulatory impact. That's another thing to consider. You might, like, yes, we want lower Bitcoin, but we also don't want too low. Maybe we just want 15. That'll be a happy level where the market doesn't get too smacked. Strange comparing when others can't do that because most people don't have that much. Well, the thing is, I have to speak to everyone because there's a variety of wealth here. Some people have tens of thousands. Some people have $100 and they're looking to invest in alts, and some people have $1 million and they're looking to preserve. Like, I don't know individually where the audience sits. All I can do is give my opinion every day, and based on my experience, and you can take what bits out of that you like and you find valuable, and you can disregard the bits that you don't and don't apply to you. Because I can only talk from my experience. I can't pretend that, I've got $100 when I stream. I can't do that because that's not me. And if it's not me, it's not authentic. And I want to make authentic content, and I want to make content that I genuinely enjoy making and believe in. Someone says Sui is mooning. Okay, we're talking about Sui at the end. I do have, you guys can probably see if you read my tabs, you can front run some of the show a little bit. You can see that I've got Sui planned. I actually have a big discussion around that. It's freaking crazy that it's in the top 10. And there may be short opportunities, but not so quick because there might be move up first. That's the TLDR. Small investment adds up over time. Hang with it, everyone. Oh, for sure. I mean, you're going to get this year opportunities to accumulate altcoins, I think, at really fundamentally amazing long-term prices. And even right now, you're seeing some pretty good buys, but we're not seeing great buys on a lot of alts. We're not seeing mind-blowing buys on a lot of alts, but I think we're going to get them. I really do. All right, let's keep going with the show. Doing a lot of those. Okay. Just reading, getting caught up on some comments. So this was the point I was making at the start of the show when I said it sets a scary precedent. And that's because the banks are condensing from what was 30,000 banks in 1920 to 4,000 banks at the start of the year, and what could be closer to 2,000 banks in a few years. You're getting a concentration of wealth. 70% of customer deposits are already in the hands of the top 10 banks. It already is very condensed, but it's getting more and more and more condensed. The government wants this. Speculation, conspiracy, sure. But in my opinion, the government wants this because essentially they want to usher in a new wave, and that is a CBDC. They want to implement this FedNow service, this CBDC, central bank digital currency. And the reason why they want to do that, well, the reason why they want to condense the banking sector in order to do that is because it's a lot easier and more efficient to roll out a service when you're only controlling 10 parties versus 1,000 parties. So it's much easier to have control if you remove the friction. And the banking collapse is removing the friction. The control comes later when the sector's condensed. So 𝗵𝗺𝗄 tweeted about this as well and said, Blue Tribe is killing Grey Tribe banks and Red Tribe banks regionals to consolidate all the assets in the too big to fail banks, especially JP Morgan. Then they roll out FedNow. Even if it's not a CBDC, it's a central bank control with every transaction choke point through them. First, JP Morgan, then CBDC. And Zero Hedge said the Federal Reserve is single-handedly destroying all US regional banks to make JP Morgan the biggest bank in existence. They want this. And you know what the craziest thing is? JP Morgan was assisted by the FDIC to purchase First Republic Bank. So it was in JP Morgan's interests not to step in before First Republic collapsed, but actually to wait until First Republic basically went to zero and it was a wreck, and then step in and buy it because they knew they would get FDIC backing. The FDIC is a taxpayer-funded institution. So you have, in a roundabout way, the government enabling big banks like JP Morgan and almost incentivizing, right? Because they're incentivized to watch their peers collapse, so they can gobble them up and become more powerful. If you're the head of JP Morgan, you want to own the whole banking sector. You make more money. It's just a greed play. From the bank's perspective and from the government's perspective, it's great because you get more control. More control means CBDC. Now, this CBDC thing's happening whether you like it or not, and it's horrible for many reasons. I won't go on a CBDC ramble today, but my very quick take on CBDCs is that it's very privacy degrading. It basically removes the entire purpose of why money exists. Money should be hard. My fundamental belief is that money should be hard. Hard money is money that isn't printable. Hard money is money that has a limited supply. Hard money is money that's still divisible, but not debasable. US dollars aren't that, and certainly a CBDC isn't that. It's just another digital currency that can be created with the click of a button. In fact, there's less barriers to printing money once CBDCs are introduced as well. It's basically what money shouldn't be, but is becoming. And it's a bit of a shame. Well, it's not just a bit of a shame. It's probably going to lead to the downfall of the US, but they won't know this until it's too late. But that's a much longer term thing. That's a much longer term thesis. And I'm not just saying that about the US. Many other countries are doing this as well. We don't all have to be millionaires. No, but we all can be. You all have the opportunity to be a millionaire because, we're in crypto and this is the biggest opportunity of what I think is, crypto and AI are the two biggest opportunities right now, I think. So when you have all of this drastic change in the economic and political environment that I believe now is the fastest pace of change we've had almost in human history due to the introduction of technology, that also creates opportunity. And it's weird because CBDCs at face value, you might think, okay, that'll kill crypto, but I think it's the opposite. I think it's an advertisement for crypto because everyone is going to now be using blockchain or some form of blockchain. Everyone is now going to be using digital currencies. The older generations especially, but basically everyone, will now have an understanding of how it works and how efficient it is and the benefits of it because they're going to have faster payments, quicker payments, easier payments. And they're going to be like, oh, this is great. Money's better. Money's quicker. And then they're going to realize, well, why would I do this with money that the government's giving me when I can do this with money that I actually own and have custody of and is on the blockchain, so it's immutable and you can't print more of, and it's even better. A lot of people are going to migrate, or a lot of people are going to realize at least realize that they can do the same thing but have custody over their own assets, and most importantly, it's decentralized. And the custody thing's important, by the way, because CBDCs basically will let the government have infinite levels of control over what you do in your daily life because they can cut off access to your money at any time. So they can say, like, I don't know, if you don't, they could do like carbon credits or something, like where you, if you use too much energy, they like limit your bank account, stuff like that. There's a million ways they could do it. There's a million narratives they could propel, but once you have control over someone's currency, you can use it against them. So I think crypto is that advertisement. Well, we actually have custody of this asset. I don't have to. If the government hates me, it doesn't matter. I have my Bitcoin. It's on my ledger. I own my ledger. I own my seed phrase. Only I know my seed phrase. And okay, the seed phrase has some flaws, and hopefully some of those issues are resolved. But in many ways, it's a lot better principally than having a CBDC. In fact, it is. So that is, I think, what is happening now with the banking collapse. And for Bitcoin, I think long term, this is very bullish. It's why I'm bullish on Bitcoin long term. It's why I stack Bitcoin long term. but I only stack Bitcoin on big dips long term. So like I wouldn't stack Bitcoin now for long. And this is just my opinion, not financial advice. You have to make your own decision. I wouldn't stack Bitcoin now for the next 2 years. I mean, yeah, there's many arguments actually. There's many arguments. Okay, so here's the first argument, right? It's that, okay, I don't care if I buy at 15, 20, 30, 40, 50, because I know Bitcoin's going to $1 million. So I don't care. Anything in here is going to be a 9,000% return. So I don't care. And they're right. The people that say that are right. And I actually DCA into Bitcoin most months. So basically every month. So I actually do that. But what I meant by saying I'm not buying Bitcoin here is I'm not going in with size. So I want to stack more Bitcoin long term. But I don't, and I'm happy to average in every month. But in terms of big averages, I reserve those big buys for times of huge fear. This was a time of huge fear, and I was very open about the fact I was buying in November. This was a time of huge fear. I didn't buy in May. That was the lunar collapse. I don't think I bought significantly, but I should have. I think I bought around here. I bought around here. I even bought around here. But those were long-term buys. And I also bought higher. I also bought higher as well. And I also bought lower. You guys know I first bought Bitcoin in 2019. If we actually look where I first bought it, and it was $5,000 at the time. So it would have been something in around here. I think it was somewhere around here. So anytime we get a huge dip now, like a big significant dip, I'm just stacking long term. Will I still do a monthly buy after a pump? Maybe, but that's more of like a small DCA that I'll do, with, a few $1,000s or something like that. Small. Get a big dump, and I'll look at putting in much more size, significant size, into Bitcoin, ETH, select alts. But I treat Bitcoin and ETH very differently from the rest of my portfolio, because I use altcoins essentially as a proxy to make more Bitcoin and more dollars as well, because dollars are important. Liquidity is important. People forget that. But at the end of the day, I want to make more Bitcoin. I want to make more Ethereum, and I want to make more dollars. And the dollars are good to buy more of that stuff. And also just to live. Like, I don't just want Bitcoin. I think that's also stupid. Like, I want also dollars so I can travel and enjoy life and buy houses and all sorts of stuff. Like, you also need dollars. But Bitcoin eventually will give you much. I mean, if it outpaces the growth of the dollar, which it has historically, then actually I'll show you this really interesting chart. Bitcoin to USD. Or is it USD to Bitcoin? USD. Yeah, look at this. This is the US dollar versus Bitcoin. So we often look at Bitcoin versus the US dollar. But I actually like looking at it this way, because it shows you if you had held Bitcoin, if you had held USD, how much money you would have lost against Bitcoin. And the trend's pretty clear. Now, this trend becomes, a little bit skewed, because in 2013, 2014, Bitcoin was a terrible asset. But even if not terrible, a nascent. I didn't mean, like, it wasn't a terrible asset, but it didn't have proof. It was nascent, and that's why you get crazy pumps. 5 years, though, on a 5-year time horizon, the US is still bled against the Bitcoin. And on a 10-year time horizon, that trend's even more apparent. And the more you zoom out, the more apparent it gets. Obviously, on the smaller time frames, there's periods where the US dollar has outperformed Bitcoin. But that's actually pretty rare. The only real time frame that's happened on is the week, the year, and that's it. It's like basically just the year that the US dollars actually outperformed Bitcoin. And obviously you could cherry pick other dates, like in 2020, a little bit in 2019. Like, you could cherry pick dates, but in general, the trend's down. So if you're holding Bitcoin long term, the trend is you will make more dollars without having to worry about making more dollars. But your wealth is actually increasing because your buying power is increasing. So for me, owning Bitcoin is all about having buying power. Buying power to have flexibility to buy what I want and live how I want, because I know my money's at least holding or outperforming dollars, which are depreciating. and oftentimes they outperform because they depreciate. So I want to switch the discussion now to shorter term because we've spoken a lot about long term, and as good as that is for a bit of a perspective shifter, it's very boring as well because we want to make money in the short term. So I do have a few things for you today, which you will be hopefully able to make money on in the short term. So let's pivot the discussion. Let's put our hourly chart goggles on, and let's get straight into the short term stuff. You know, someone said Mars is wise beyond his years. I mean, I appreciate that. I don't. I mean, I'm only 22, turning 23. I don't have the economic historical experience that someone that studied, you know, a PhD in economics would have, and I don't have 40 years in the markets either, like other people will have. But what I do have is a work ethic, and what I have done is spent the last 3 years, especially since 2020's lockdown, when I was really involved in DeFi summer, basically doing crypto for 5 to 12 hours a day plus. And you would be shocked if you spend 3 years doing something for 10 hours a day, you'll be shocked at how good you get at that thing. And look, there's a lot of better traders than me, and there's a lot of better researchers than me, but I feel like I've been able to at least get into the top 10%, or maybe probably even higher, but you know, at least conservatively the top 10% because of my work ethic. And that's not a brag because there are a lot of people better than me, but if you work harder, you don't need a crazy amount of natural intelligence. All you need is work ethic. And if you can't beat someone on smarts, beat them on how hard you work and beat them on your consistency, and you'll beat them. Because intelligence gets you nowhere without a really strong work ethic. So yeah, education matters, but it's not. It will never beat a hard worker. So I also had a good education, of course, which helps. But being someone that basically spent 3 years in this industry almost full time, and for the last 2 years, definitely full time. And when I say full time, I mean more than 9 to 5, literally 8 until 10. So you know, 14-hour days plus. But now more 10 to 12 hours because 14 I was burning out. Now I usually work 12 hours. You'd be surprised how much you can learn and you can pick up. You can learn to trade in a lot less than that. You can spend 2 hours a day in crypto every day, and you'll be very good. You don't need 12. All you need is 2. Even 1 a day is enough. Even half an hour a day is better than none. And yeah, the more the better. But also there has to be a balance of enjoyment, because if you're not enjoying it, then it's hard to stick to. And I think a lot of people stopped enjoying it when the prices went down, and that's a shame, because when the prices go back up, they're going to start enjoying it again, and they're going to all get back in. And there's a lot of people derive their enjoyment off the dollar returns, but they don't realize that the hard work now actually leads to way more enjoyment later, and all of us are going to be laughing in a few years while a lot of those other people are too busy worrying about what to buy. But we won't be worrying about what to buy in 2025 because we would have already bought in 2023. And why we're not going to be worrying about, should I FOMO into this meme coin because our bags are so fucking full by then that we don't care about buying anymore. We have enough. We actually want to sell because we have too much. That's where we want to get. And that's why being in the market now is a lot better than being in the market then, because I guarantee you it'll be absolute retail mania during that period. And the only real people that'll make money during that period are either the very good traders, so either learn that skill now, or the ones that bought early and rode the and have ridden up from the lows, or at least anywhere close to the lows. And it just takes all the risk out of the market, because even in a bull run, I'll be trading and I'll be investing in narratives and I'll be degenning, but it won't matter, because even if all my degens fuck up, it won't matter, because I still got such good entries on good projects that I have a buffer. So I have so much wiggle room to lose money, if that makes sense. So that's the position you want to be in. It's more a position of ability to risk more in a bull run because you've already made so much, and not trying to make your foundations in a bull run, because that'll just screw it up. You're coming back, baby. Good to see you back, Tony. See, let's look at short term now. Enough long term stuff. Bitcoin daily chart firstly, and then we'll go 4 hourly. All right, just let this load. You know, it's okay, this is a weird market to predict. I'm kind of almost like stuck on exactly what to say because I want to get my words out right. The banking collapse may have breathed fresh life again into Bitcoin, but I'm not sure just because of a narrative, and this is just me speaking off the top of my head here, but I'm not sure just because the narrative's strong that allows me to look past price action, because price action at the end of the day tells the story. And this is a very weird, this is very bad. It's not great price action from Bitcoin, and I'll explain why. You have your highs, very simply. You have your rejection of your 31. You have your lower highs. If this is another lower high again, that is not great. You're probably going to target this area, the top of this blue box. What's interesting, though, is we're getting higher lows. Higher lows, higher lows, higher lows. So what we're actually forming is not something I can draw very well for you, but from a technical perspective, what we're forming is a wedge. Now, you can't actually draw it very well for the reason being this low is not low enough. So if this low is down here, you could draw it in quite nicely. But I'll just do a really rough one just to give you an idea of the trend. And this is not, these aren't lines you can trade off exactly, but they will give you an idea of the trend. What we're forming is a wedge now, like this higher time frame wedge. If you go into the weekly, so the breakout to either side now becomes something that I'm watching from a momentum perspective. Now, it's not exactly tradable, right? Because why isn't it tradable? If Bitcoin breaks out to the upside here, you still have resistance in this zone. This whole zone's resistance now. But we can still get rejected. And if we make a lower high, we also can get rejected again, come back down into the wedge, and then break down below. What am I leaning towards? A break down or a break up? I'm leaning towards a break out of the wedge, yes. But then I'm leaning towards getting rejected, just due to the fact we're making lower highs. Happy to be proven wrong. But in the short term, I think there's more downside risk for Bitcoin. However, this banking narrative is giving Bitcoin new life. If that is the case, let's go into the weekly. If that is the case, then and we do push up to the upside, then your next target is 30 or 30 to 31. I would love an opportunity to short this zone again from a trading perspective. Obviously, you guys know I'm long BTC long term, right? But from a trading perspective, because I do leverage trade with a smaller percentage of my portfolio, usually like 5 to 10%, which is not very big, but you could even use less. I want to short this zone. So if we do end up pushing up because of a banking collapse, I still feel like there's a very strong sell wall here that's probably going to take us down. For me, my bias is bearish. I'm not confident, and I'm just telling you my bias. It doesn't mean it's correct, right? What I said yesterday on the show rings true. It's that just because us traders come on and we say stuff doesn't make it true. It's just opinions. You just have to decide whose opinions you like and whose you don't. But my bias is slightly bearish. But let's see. Let's see what happens. If we do break out of this wedge, then yes, you can target the upper region here. But then again, I'm just going to end up flipping short. So the question is, does it make sense taking that 7% long? Because BTC versus ETH is still relatively strong, you're probably looking at a situation where if you want to long, you long Bitcoin. If you want to short, you short alts. That's what the chart's telling us. Where's ETH BTC? I've talked about this a lot, but ETH BTC is still in that downtrend, right? This macro, it's on the weekly, but still this macro downtrend. On the 4-hourly, ETH is now in an uptrend. But the next level, I mean, ETH would really, really, really need to break above and hold above the 6-7 level. See this level? Major support zone for ETH BTC. I would probably short here. and look for this to be range high, and then this to be like deviation above, and then back down, just based on what I've seen historically from this level. So until we flip above, I'm not like super bullish alt. So for that reason, although this could push up a few percent in the next day, 3%, I would probably still long BTC, short alts. So, what long BTC, short alts means, by the way, in case that doesn't make sense, it means if you're longing long Bitcoin, if you're shorting short alts. It's not saying, yeah, it just means like you got to preference one over the other. There are a few alts which are outliers, though. I got 2 today, which are bullish outliers that I'm going to share with you. Have I talked about Sui? No, it's at the end. That's one of the ones I want to talk about. Your ADA bags are full. Punkle, that takes some real I don't know. That takes some real conviction. I'm not the most bullish. Do the OKX giveaway. Oh yeah, I'm not doing it today because they haven't sent me the numbers. So unfortunately, I can only do it when I get the numbers. So anyone that's just here for the OKX prize, hopefully it's tomorrow. I mean, once again, I can't do it without the numbers. So I'm assuming they're still calculating. That's for the Maldives prize. Clearly, we've got the Tesla at the moment. So that was for 18-1. 2nd to 22nd of May, we have the Tesla. So yeah, if you're not competing in that, get involved. Also, we got the ByBit comp before we get into some other altcoin news and some alpha. I do have, by the way, a project in today's video, which I think is true alpha. Lower cap, but true alpha. I hate talking about low caps, but sometimes you just got to talk about good projects. And sometimes you just got to degen. But the why do I hate talking about low caps? Because people just accuse you of pumping and dumping. That's the problem. Even though we have an ethics policy on the channel, you still get accused. It's annoying, but sometimes you got to if it's a good project. Not super low though. I'll never talk about something with like, not never because I have, but I'll never like condone buying like a sub $1 million market cap project. I think that's a bit irresponsible. Only thing I heard from Kanata was failed Sunday swap. Yeah, I mean, I'm not a huge fan of ADA, but if you like it, you like it. So the ByBit comp, just reminding you, is live now. We have Reptilian number 2. My next trade in this is going to be dependent on how Bitcoin reacts in this zone. If we start rejecting here, so if we come down, reject, then I might look to short. If we break above, then I'll probably look to take a short-term long for like a 3% gain. The FOMC trade was good out of this blue box. I didn't open it, but that was the trade. It was to long. I was asleep. And I have a rule now. I don't long when I'm asleep. I just don't. I can't do it. And I wasn't comfortable putting in a limit order. Even though I knew this box would bounce, I wasn't comfortable putting in a limit order while I was asleep and letting the market do its thing. It's just like I prefer to be awake and trade when I'm awake. So that's why I didn't long that. But if you did long the zone, well done. You probably would have made a little bit in the comp, like a 5% move. Now we're looking at whether this rolls over. If it does, I'll probably short today, and I'll probably short alts, the weakest alts. So what you would do to work out what the weakest alts are, it's very simple. You would go, okay, so you look at let's say, okay, you're determined to short Bitcoin. Let's say Bitcoin pushes up, rejects, retests. Okay, I want to short. Do I short Bitcoin? No. I short alts that are looking weak against Bitcoin. So what alts are looking weak against Bitcoin? Well, you'd go through your alt list. You'd look, okay, AVAX, is this looking weak against Bitcoin? Yes, it's looking weak, but there's not a clear trade. The trade's still like a few percent away. Is Atom looking weak against Bitcoin? Yes, but it's still made 2 higher lows. So you just go through and you'd look at what coins are the weakest, and then those coins you look for short setups on. And then you put it in confluence with their USD pairs. So Mana, Matic looks awful. But it's still, Matic looks horrible. What about optimism? OP Bitcoin didn't look good the other day, but it has been in an uptrend. Yeah, it started breaking down. This isn't a bad one. OP is not a bad one. So let's just take OP. So you think, okay, breakdown will continue to take us to like 6.5. Then what you want to do is put it in confluence with the USD pair. So okay, we know Bitcoin's going down. We want to short OP because OP is weak against Bitcoin. Now we want to look at OP's USD chart. So where do we short? Well, if we push up to there, we can short 237, or we can short the breakdown of 19. So maybe this one doesn't line up. But you got to keep going through alts. I'm showing you what I would I'm not going to spend an hour doing what I'd actually do, which is just go through all of the charts and line them all up. But that is my process. Bitcoin first, alt BTC second, altcoin USD third. All three need to line up. You might need to look at 20 altcoins before you find one, but once you find that one, then you've likely got the best short. You've likely got the best trade to trade, but they all need to line up. If not, you're just better off trading Bitcoin or ETH flat. So yeah, I'm not going to do it now because I have other stuff planned, but if I was doing a live trading show, I'd probably just go through every coin and look for a short. But I won't do that now. Plus, remember, I'm not shorting now. It does rely on how Bitcoin reacts in this zone, as we discussed. So yeah, if you do want to join the ByBit comp and you want to take part, it's $250 minimum entry to win a Tesla first prize, ROLEX second prize, $10,000 third prize. So we have a few people doing pretty well. But after the rank 10, it drops off pretty significantly. So if you want to get involved, there's a link in the description. Click that link, register through that link. You need to use a Banter link to qualify. Once you register, then you can start trading to potentially win a Tesla. Huge. I think it's almost $100,000 giveaway on ByBit and OKX as well. We're not doing a trading comp, but it's a giveaway. So if you trade $1 spot or derivatives, you qualify for a raffle ticket to win a Tesla. We're in the Tesla giveaway period now, guys. Officially, you have 2 weeks or 2.5, well, almost 3 weeks. Let's just call it 3 weeks to win a Tesla or $50,000. $50,000 reward or a Tesla. It's huge. It's massive. We've already given away the iPhone, the MacBook, the city tickets. I'm still giving away the Maldives tickets on the show, but the Tesla's next. And the more you trade for the Tesla, the more higher chance you have of winning the Tesla. So you get 5 raffle tickets for every $10,000 in accumulative trading volume. So that's not just spot. That's also leverage. Obviously, $10,000 of trading volume would be ridiculous by itself. Don't force leverage just to farm volume. Still keep in mind, like you want to trade responsibly. So don't use leverage you're not willing to use normally. But if you were going to trade anyway, if you were planning on trading this month, and you also wanted to qualify for a prize, this would be a good double whammy to like qualify for the Tesla and rack up raffle tickets for the Tesla, which is in a month. If we made volume before the 18th, does it count? Before the 18th of May? Yes. For the Tesla, of course, because that's during the window. If you're saying before the Maldives, it counted for the city tickets, but they're already given away now. So these next 3 weeks are purely Tesla, farming, basically. So it's the big one. So if you weren't trading on OKX before because you didn't care about a MacBook Pro or an iPhone, well, I think now is the time to care a little bit. And you can just take the $50,000. You don't need to take the Tesla. You can literally take the 50 grand, buy a Tesla, spend the $7,000 extra on a holiday, and go to the Maldives anyway. So you can really get the 2 prizes if you win the Tesla. Probably shouldn't be saying that, but yeah, that's just how it is. So yeah, link in the description to qualify. It's simple. You click join now. Once you click join now, you can start earning raffle tickets. You can see how many tickets you've earned through the dashboard, which is also through that link as well. Okay, let's get on to the rest of the market. I want to go quick now. I've spoken for a lot about a lot of stuff. We need Phantom Mars. Okay, let's do Phantom charting. This show's longer than I was planning, but to be honest, there's a lot to talk about, and that's why. And I even said to Paolo before the show, like, there's so much today. Okay, Phantom looks good. Oh, thank fuck, we bounced here. I'm a spot holder of Phantom, full disclosure, so I did want to bounce. But also happy to buy more lower. It's one of those bets I have conviction in, as like, I guess, an ETH ecosystem. Not hedge, but just to play against it, given how dominant L2s have been. Altail one thesis, I think at some point comes back. Phantom's one of them that I want to bet on for that reason. Phantom looks good, because we had a very nice bounce off this zone, that I outlined, this 40-cent zone. So that's nice. We did have a higher high here, but in general, this still is a downtrend. So that's something to keep in mind. But we have made a higher low now, it looks like. So what you want to see is a push up, clearance of this level. That's what you want to see. Obviously, though, you can trade it in the meantime, up to that level. Still a nice trade. Let's look at the Phantom BTC pair. See, it's weird because, okay, so if you were shorting the market, you wouldn't short that, for example. It's looking strong. Phantom BTC. Phantom BTC looks weak. So this is where my system would tell me not to long Phantom, unfortunately. Because yeah, that's how I trade to beat Bitcoin. I trade on the BTC pair now, given how dominant BTC is, given that Bitcoin's the market leader and not ETH at the moment. I'm trading on mostly on Bitcoin, so I actually wouldn't long Phantom because it's in a Bitcoin downtrend. I'm only looking to long things in a Bitcoin uptrend on pullbacks. So INJ is one of them. Joe is one of them. Although it did break down, so to be honest, let's look at its USD pair. Could be actually a good one. Gives you an idea of how I trade at the moment. Fuck. This is a support buy right now. This is a spot buy zone, guys. If you wanted Joe, this is a spot buy zone. If you want to FOMO in higher, it's down 40%. This is a spot buy zone for me. Yeah, we could go to 16 cents long term, but yeah, this is for me a spot buy zone. Up to you what you do with that information, but yeah, I mean, I like it. You can also probably cut this position if we break down, right? So you could buy, cut here, and then only lose like a couple percent, and then try and average in lower. I don't know. It depends on what your plan is and if you're a short or a long-term trader. But for me, this is good. It's down 14%. It's at its support. Yes, you're trying to catch a falling knife, but the product's good. The metrics are good. And I like it. It's post-AVAX conference, probably why it dipped so much. So I don't mind that. Render, I'm still targeting 1.4. I don't know if we're going to get there, but I can't bring myself to buy now. I just can't. I can't black sales. I can't. It's a short-term long, though, if we break out above this level, for sure. It's a short-term long. That would only be the case, of course. All alts we want to line up with BTC. That would only be the case if we actually do get this Bitcoin breakout to the upside. But obviously, you know, I probably do want to flip short around the 31. Okay. Next topic, because we've gone through a couple alts. Bitcoin inscriptions. I was going to do a bigger show on this, but I'll just speak about it quicker. Bitcoin and ETH, you know, it's very funny. Price action wise, Bitcoin looks decent, but short term starts to look more bearish. But no, on a weekly chart, price action wise, Bitcoin has been very bullish. But the most bullish thing about Bitcoin isn't the price action, isn't the banking narrative, really. Well, it is, but from a fundamental perspective, from an on-chain perspective, the most bullish thing for Bitcoin has been Ordinals. So this BRC20 token standard, which allows you to create meme coins on Bitcoin, as well as the ability to inscribe NFTs on Bitcoin, has seen Bitcoin's transactions hit an all-time high. That exceeds bull run peaks. Look at the bull run. Transactions never hit 457,000 a day. And the daily inscriptions of Ordinals have gone crazy. They never hit that much. And as a result, we're now seeing the Bitcoin hash rate hit all-time highs. Now, what does the all-time high hash rate mean? It means the Bitcoin network is the most secure it's ever been. So we have an extremely secure Bitcoin network, which is obviously very, very good for the network. So there's a plus and a minus. The positive is a more secure network is obviously a better thing. The negative is more ordinal transactions mean Bitcoin isn't being used for payments because it's too slow, and ordinals are just clogging up or congesting the network. That's a valid concern, but it would be more valid if Bitcoin was actually a payments network. You do have Lightning for payments now, though, so I think we just have to accept that Bitcoin will never be a payments network, and you're just going to have to use a third-party layer like the Lightning network to get your scalability for payments. Here's the alpha, though. Last time the banking collapse happened, last time the banking failure happened, sorry, I've got like a sore back, just like tweaked something then, when I moved. The last time the banking collapse happened and Bitcoin went on a run, because you had the banking collapse in confluence with a Bitcoin ordinals rally, what we saw was STX perform super well, stacks. And you can see this from lows of 20 all the way to $1. I like the Stacks thesis a lot. Okay, Stacks itself is not ordinals. Stacks is a layer 2 for Bitcoin. So in and of itself, maybe the fundamentals haven't increased that much. I accept that. But what Stacks becomes is a proxy bet. If you want exposure to this Bitcoin ordinals narrative, which isn't going away, how do you bet on it? I think Stacks is one of the only viable candidates. It's one of the only properly backed, properly vetted product in the market that's solid, that leverages Bitcoin DeFi. So I like it as an investment, purely from a narrative perspective, which obviously narrative is fundamentals, but I'm not even talking about like real product drivers here. I'm talking about pure fundamental narrative drivers. Now, we do have a wedge that's starting to break out, and I become a very interested longer of Stacks here. Probably smaller position, but for me, this is an interesting long. If you draw it like this, we've actually already just broken out, and we're now having the retest, but I like to draw it from the original wick high, which is this wick. We do have 4 tests, which is generally a decent trend, and it's also on the daily. Let's go on to the 4-hourly, though, because if you're opening a trade, you don't want to do it on the daily. You want to do it on the 4-hourly. On the 4-hourly, we're starting to get a nice breakout. So let me just alter this. So if we get a Bitcoin breakout, Stacks is probably your best long, in my opinion, out of the alts, for sure. What I would love to see is just Bitcoin make a little move, although it is breaking above. Let's go on to the 4-hourly. Let's see if we've had a confirmation candle. Look, the horizontal is more important than this red line. This red line is not as important as this. So this is first. Horizontal's always first. Diagonals is second. Is Stacks on ByBit? It is. Let's go on Stacks USD. The problem is this environment makes it hard to take on additional risk. But I'm weighing up a trade. I'm weighing it up. I'm weighing up the risk. I don't know whether we've had a retest now. It's already moved 2%. I've missed a fucking retest because I was streaming. Depends how you draw it, though. Depends how you draw it. That's the thing with these lines, right? The trend is much more obvious on the daily, than it is on the 4-hourly. I'm just confusing myself. But yeah, depends how you draw it. That's why I freaking hate diagonal trends. But this is probably the best one because you have 1, 2, 3, 4 touches. So yeah, it's exactly, Colin, exactly. Hasn't really had that breakout yet. Has of the diagonal, but if we go into like horizontal, if you look at horizontal levels, hasn't cleared yet. Watch this. Watch this. Could be a long today, especially if Bitcoin breaks. Bitcoin breaks, I think Stacks could be the best long. Not the best. There's other good longs, but if Bitcoin holds one more close above here, ideally a break of this orange line as well, maybe I'll take a short-term long on Stacks. It's probably one for the ByBit comp. Anyway, getting too distracted with trading now. And we still have to talk about 3 more important things. Second most important thing, it's not just Bitcoin fundamentals that are strong off the back of on-chain activity, it's Ethereum as well. So Ethereum on-chain activity is actually the strongest it's been in a long time, largely because this meme coin mania has resulted in crazy amounts of ETH burn. Look at this amount of daily ETH burn, 8,720. It's insane. You know why this matters? Because pre-merge, that would have been so this is on the 7-day time frame. Pre-merge, that would actually, let's go on to the daily. On the daily time frame, this 6,000 ETH that's been burnt would have been counteracted exactly by the 5,600 ETH that would have been released to the market if we were still on proof of work. But because we're now on proof of stake and we don't have issuance of ETH anymore, ETH is now allowed to be deflationary. And if we go into the 7-day chart, we actually have burnt 26,000 ETH. And since the merge, guys, we've burnt 145,000 versus a 2.5 million increase in issuance versus proof of work. Ethereum is now minus 1.9% deflationary. Ultrasound money, baby. But no, it's hard. It's hard to make the argument. I don't think it's actually ultrasound money. I think let's calm down about that. But I'm a big Ethereum bull long term, and I think just think about it this way. We've had a tiny meme rally. It's big for memes, but in the scheme of bull runs, small liquidity wise, meme rally in 2023 in the middle of a bear market, and Ethereum has burnt to a minus 0.19% deflationary status. And on a higher time frame, in the last week, it's at a minus 1.16% yearly projected supply growth, meaning if we kept this rate of burn up from this week for the whole year, Ethereum supply would reduce 1%. Now, in a bull run, what multiple do you think ETH is burnt on today's current burn levels? 5x, 10x? All right, let's take 10x. If bull run goes for a year, that's a 10% supply growth of ETH. Bull run goes for 6 months, it's a 5% supply growth. 5% over 6 months, 0.25% supply growth. It's a lot. It's a lot. And I think fundamentally, ETH as a chain is in a stronger place than ever. It has L2 support. It has the Cancun upgrade coming soon, which is going to reduce fees on L2s by an order of magnitude. It has proof of stake. The fundamentals now on Ethereum are much stronger than they were last year, and that's probably why we're higher now than we were last year. Fundamentals are stronger. We're above range highs again, which is good. If Bitcoin breaks out and holds, you could look at a long on ETH at 80 and 50 after a slight dip. Let's monitor that. But yeah, that's my theory on ETH. 𝗕𝗚𝗃, I explained before. We had the breakout. If you want to buy, probably got to buy closer to horizontal support. Let's talk about 𝗬𝗎. This is what the 𝗬𝗎 chart looks like after it's launched. I like 𝗬𝗎 as a project, but I don't like what they've done with the tokenomics, and I'll explain why. This is their token supply. So 𝗬𝗎 is essentially dumping the majority of its token supply within the first year of its launch. By July 2024, in a year's time, there'll be 30% of the token supply launched. Now there's only 5%. So they're going to increase the supply by 25% in a year. Why not just launch with more tokens, guys? I don't really understand why they do this. I guess it's because they want to they don't want to scare the market like they can be dumped on. I don't know. Do they want to pump the price in the short term? I'm not sure why, but it just seems too aggressive. I'd rather a linear schedule. It seems too aggressive to me. I did a tweet on this, actually, and said it was a bit aggressive. Early contributors dumping on the plebs. Yeah, look at the earlier contributor unlocks. So this blue thing, right? This blue thing. Huge unlock. They get the most steep unlock out of anyone. Let's see what people are saying. Early contributors. Yeah, people are not liking it. Trash tokenomics, Crimson. Trash. You can't buy this thing spot. I'm sorry. You can't. No way. I'm not touching it with a 10-foot pole. Can you trade it? Probably. And what I think probably happens is an Aptos here, because what happened with Aptos was everyone was shorting because they all thought the tokenomics were trash, and then that just led to a perp squeeze. So if I had to guess what happens here, and this is a wild guess, if I had to guess, I would say we get a short squeeze before the real dip like Aptos. And then Sui becomes a great short. So let's just let it do its thing over the next couple of days. Let's let it pump. Let's let it do its craziness. It's only been out for 12 hours, so I can't even do TA. You can't even chart it. Let's let it pump, maybe to $2. And then at some point, let's do what we did with Aptos. And we actually did this, Rand and I. We shorted it. And let's short Sui. Because at some point, the market will get will sober up off its Sui high and eventually come to the senses that this is ridiculous. It's a 14 bill valuation. This is a top 7 project now by market cap. This is ahead of Arbitrum, Avalanche, Solana, Aptos even, Polygon, Optimism, Chainlink, Lido, Nia, Phantom, Stacks. It's ahead of all of them. It's crazy. It's probably going to flip Cardano soon. I'm not even kidding. I'm actually not even joking. Large percentage chance it does. It's insane. Now, market cap's a lot lower, but you have this FDV due to the insane emissions. So here's the thing right now with Sui. It's got low circulating supply. It's got low liquidity. The token price has been pumping because of that. I mean, I know it says it's down 30%, but that's rubbish, because on launch, of course, you're going to get a wick. It has pumped from that count at 120 to 140. But nonetheless, it's a very high valuation. And the low circulating supply is giving it pumpamentals, basically. Okay, I want to talk about a project now. 70 people have left, but I think they've just missed out on what could be some good alpha. I want to talk a project that I said earlier was like a smaller cap. Now, it's not super small cap, but it is 20 mil, so keep that in mind. It does have a 160 fully diluted, though, so it's reasonable in terms of size relative to other cryptos. But I met with the team yesterday, and I was very, very, very impressed. So if you don't know what SPOOL is, it's a DeFi product. It essentially allows you to build and execute custom vault strategies. So giving people access to DeFi without having to do with the hassle of managing their own position. So it'll automatically rebalance based on a predetermined risk profile. They have some new products, though, coming out soon that I'm actually going to test out later today. Very excited to test out these products. That I just got the auditory brief. Just they told me basically what the products were. So I haven't actually gotten to use them yet. But from what I heard, it could be game changing. So I was pretty impressed. Now, I just want to make it clear I'm an investor in this project. I'm an investor in it because I believe in it. And I talk about things I believe in. You have to do your own research and work out whether it's something that you like. Unfortunately, I can't say as much as I would like to because they haven't announced a lot of stuff. And I'll let them launch their new product upgrades in due time. But I really, I think it's a cool project. So I just researched it a bit further. And yeah, I was just very impressed by the team. And I thought it was quite impressive. So just thought I'd let you know. I think maybe you guys know about it already, but I thought I would mention it today. But I'll talk about this more in future videos. Up 7% today, as well. Let's check out its price. It was crazy in the bull run. It was like $8 in the bull run, but bull run prices aren't relevant. Bull run prices aren't relevant because everything was overhyped. I think the good projects that build quality products, like we saw with Trader Joe, in the bear market, they end up being big winners. The ones that work and tirelessly build for like a year, and then in the bull market, they decide to. So they work in the bear market, they invest in a bear market, and then by the time the next bull market comes around, they reap the benefits. That's what like Trader Joe did. That's what 𝗕𝗏𝗕𝗧𝗏 did after Luna as well. Abraham's aping. Yeah, aping already. And that's what I think SPOOL's doing as well. So yeah, it seems like a cool product. Thoughts on Radix? I don't have much thoughts, unfortunately. Mostly, Ran has more thoughts than me. What to expect from an ex-Facebook DM scam? I mean, yeah, if you guys don't know what 𝗬𝗎 is, 𝗬𝗎 and Aptos essentially were originated from Facebook. 𝗬𝗎 scams trending. 𝗬𝗎 scams trending. I love it. I mean, I don't love it because I think 𝗬𝗎's a cool project, but I just think hold on, 𝗬𝗎 team very unprofessional. 510 mil tokens are unlocked. I don't believe we're putting out announcements regarding that. You can refer to the Binance announcement though. You guys said you would announce the circulating supply before. Oh, so they're angry they didn't announce the circulating supply. We'll have some announcement today. Don't ask me what it is. I mean, there's just a lot of drama. 𝗬𝗎 scam. I must say, 𝗬𝗎, if any of the team members are watching this video, I'll speak to you right now. You've got a good product. I think we don't know yet because I haven't had a chance to obviously use it. The network's obviously not at its full function either. From all reports, you have a decent product. From all reports, you have a lot of backing. I mean, you had a perfect platform to really gain community. Projects don't succeed without community. Launching a project with really crazy vesting in the first year, in tandem with no airdrop, when you knew a lot of people were farming an airdrop, was a mistake in my opinion. Now, I don't know if you agree with me, but you have to put community first. You probably should have just done an airdrop and were more transparent about circulating supply pre-launch and just tried to launch in a more fair manner. And I'm not saying you've killed the project. It's still a good project, but crypto's all about community building. And if I were personally launching an L1, I would focus on community first. And I would do free airdrops. I would do lots of beta testing. I know you did do beta testing, but I would do a lot of initial initiatives. I wouldn't have gone through the centralized route. I would have done it all on chain, all permissionless. So yeah, it's just not how I would have gone about launching a project. Now, I'm not saying the project's bad. It still could succeed, and I can't wait to try more dApps on the ecosystem. But in terms of a launch, seems like a screw up. Even if it's not a screw up, right? Even if you think that the vesting schedule is good and you have a reason for it, cool. And even if you think the fact you didn't do an airdrop is good for whatever reason, cool. But it's the optics that matter. The optics of not doing an airdrop were enough to outweigh whatever benefit you probably thought you were getting through doing a fair launch. And the optics of the tokenomics may be even worse than the benefit that it gives the early contributors and VCs, which maybe back the project because of that. I don't know. I don't know everything behind it, and I'm obviously just speaking of what I know and what I can see because I'm not inside the project. But that's what I would just say, that I think you guys made some mistakes on the launch. Well, it's not trash enough to not be top 10, 𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 Sui's giving me flashbacks of 2021 NFTs. A really interesting thread. Go follow Jordy. He's an absolute legend. And I really enjoy his content. Okay, so we talked about most of this stuff. The only thing I want to do now is do a little giveaway for PrimeXBT. They have joined the show as a sponsor and have been using their exchange. Quite a good exchange, actually, especially if you want like Forex and access to other pairs that you don't get on other exchanges. So also, ByBit moving to KYC. If you're looking for other alternatives after ByBit is moving to KYC, then PrimeXBT could be a good one. And I do have a few tokens to give away, like a bit of a giveaway. So if you deposit $200, you can get $50. So 25% deposit match with these 5 codes. I'm only giving away these 5 codes because obviously, I don't know, they just gave me a limited amount of codes, but I'll give them away on the shows intermittently. Deposit $200, get $50 if you use the link in the description for PrimeXBT. So decent giveaway, $53, I guess. The link is here, PrimeXBT. So click that link and you can make an account and deposit use one of these codes to get the bonus. You can screenshot, type it in, whatever you want to do, to get the deposit match. Only gave me, I think, 20 codes. I gave away 5. I'll give away over the next shows another 15. But those are the codes for that. And I think that's it for today. I'll answer any. It's already a very long stream, so if you have any questions, I'll just answer them now. We'll do like a quick couple minutes if you have any more questions, and then I'll probably move on to the rest of my day. It's a very long stream. You guys probably have stuff to do as well. We also have the, of course, the ByBit comp as well. I'm looking at a few things. Looking at a stacks trade, potentially. Also looking at look at short setups if Bitcoin rejects here. So those are the 2 things I'm looking at. Stacks long for a breakout, short setups for a breakdown. That's my plan. And yeah, so the ByBit comp's got the link here, and OKX for the both Tesla giveaways are in the description as well. You don't use it. It's actually pretty good. It's actually pretty good. I say actually because when I first used it like a year ago, I didn't like it, but now it's like really good. So it's like they've made huge improvements. It's good. Okay. Someone said thoughts on Theta. I'll give you my chart. I don't know if I have much thoughts fundamentally. It's not a project I'm stacking. It's not a project I'm like super bullish on, just for whatever reason. I don't know. I just haven't found a reason to be bullish. For me, I'm pretty selective with what I buy long term. Theta is looking. It's in a general downtrend, so it doesn't look good from a price action perspective, but look for a general breakout. That trend is not the best trend in the world, if I'm being honest with myself. It's probably something more like this, but once again, not a great trend. Just to give you a rough idea, I still got my other lines from my old charts. Just to give you a rough idea of what I'm seeing from Theta. Got all these white lines from my old charts. Go away. Then you can draw in your horizontal at this level. And then, yeah, hopefully, if you're a bull, you kind of get this perfect flip. Heading back up. Yep. See if it breaks. Next narrative. You're asking me for the next narrative? There's a few narratives I'm looking at. The next, I mean, the biggest narrative in the market's the banking collapse. There's many narratives in the future which haven't hit yet, which I think will. A lot of DeFi narratives, I think, are yet to play out. It's kind of one of the reasons why I like SPOOL, because it's like leveraging off existing DeFi and making it better, more accessible. So accessibility plays for DeFi, I think, are big. But I don't know, that takes time to play out. So I think in the short term, you've got Stacks is pretty strong. You've got Cosmos, which is super strong. So if you're longing, those are the things to look at. AVAX has been strong. We're in the conference now, so let's just wait a couple of days. Longing until conference is done. Real world assets is a strong narrative as well. I think perp dexes continue to be strong, although trading volumes dropped a little bit, so maybe weakened slightly, but still strong. So there are a few things happening in the altcoin market, but you do want ETH BTC to start flipping like the 6-7 level to get more bullish into alts, as I talked about yesterday. Why do you receive random NFTs? Probably from scammers, and I would not interact with them. That's typically what the scammers do. It's centralized. It's another centralized exchange. We do have decentralized options in the description if you want them. Apex being one of them. They have a trade to earn program, gains network as well. Those are my go-to. Also used a bit of DYDX, but I would say those are the go-to. Real world asset narrative. There you go. If you guys want to research Ragnarok's picks, you can look into them. I like CFX as well. I don't think the China narrative's going away. US regional bank stocks crashing after hours. Yeah, they are. They look bad. We'll see if there's any latest news. Oil sell-off. ASX falls. NAB Bank tumbled 7.5%. What the fuck? Oof. That's Australia. That's crazy. PacWest weighs options. Let's see. What's the PacWest ticker? It's PCW, right? PACW. Yikes. It did recover from its wick low of 57, 53, but yeah. Can Kusama reach all-time high again? Extremely doubtful. I'm not that bullish on it, personally. Yeah, I'm still going. We're getting stupid. I actually want to try this new AFL game, which came out today, but everyone says it's trash, which is disappointing, because we need a good AFL game, but I don't know if we got it today. So we got an upbit listing? Oh, no. Okay. Oh, no. This is Aptos 2.0. If you guys don't know, Aptos in Korea was like a meme coin, basically. Is Sui even... the data's not in. When did it get listed on Upbit? I do have an Upbit bot set. You guys know I'm big on the Upbit bots, but I'm too lazy to check my email. Let's check on Upbit. 9 a.m. KST. An hour ago. It listed on Upbit. That's why it's pumping. Fucking Upbit, man. Every time something lists on Upbit, it pumps. I should have front run that trade. I mean, you could probably still long Sui. Is it on ByBit? The problem is it's so... I would love to short it, but it's one of these coins that just pumps. It has no shame. It does have perps. There you go. It does have perps. Oh, I might long it for shits and gigs. I'm probably gonna long for shits and gigs, full disclosure, but not look. If I'm being serious, it's overvalued. If I'm being serious, I probably will want to short this, but in the short term, I might just long for a bit of fun. Yeah, 100% risky, 100%. It's basically a meme coin trade, longing Sui. I want to make that clear. Just got the notification. Yeah, the notifications are sometimes slow for Upbit. But to be fair, they announced it a day before. All right, cool. It's on KuCoin. Yeah, I still like KuCoin as an exchange. Much prefer ByBit, OKX, etc. All right, I'm gonna head off. Get on with the rest of my day. We talked about a lot of shit, probably too much for one show, but it was fun anyway. Thanks for hanging out with me. I'll see you tomorrow, and hopefully we get some market movement. Probably gonna look at some trades for the ByBit comp today, based on the things I mentioned. Hopefully we probably will get some volatility kicking around Asia. I know Australia's open's bad, so I don't know. Is China open bad in an hour? Something to watch out for. Until then, I'll see you tomorrow. Have a lovely day. Peace out.